Ladies and gentlemen, I'm excited. We got an amazing video for you today. In today's video, I want to share with you one of the best rotation stocks to add to your portfolio. When I say rotation stock, I don't mean a rotisserie chicken because that's the first thing I think about being a fat ass.
Booyah!
I'm thinking about a company that actually will do well in a post-pandemic universe. However, I want you to be slow and methodical about it. We're not day traders, we're not swing traders. Let's be thoughtful, analytical, and pick the best stocks slowly. If it goes up parabolic, then it's gone. We're not going to chase anything. Definitely not going to be buying hotels and airlines. Those are way, way overvalued at this point, given the risk. Not saying that they can't go up any further. I mean, the greater fool theory has proven itself before. But for me, those are too risky at that price. However, I mentioned this before. When I'm talking about recovery and post-pandemic universe, I don't believe that the world will go back to what it was before COVID. It's not going to be a snap of a finger, basically going back to 2019. Well, unless you have a flux capacitor and 1.21 gigawatts and a DeLorean.
Need a nuclear reaction to generate the 1.21 gigawatts of electricity.
1.21 gigawatts! 1.21 gigawatts! Great Scott! What the hell is a gigawatt?
But if you're not Doc Brown or Marty McFly, you probably don't have all of these elements, and you'll have to settle in living in this post-pandemic world, which, as you know, is going to be way different than anything we knew before. Consumption patterns will be different, employment patterns will be different, enjoyment patterns will be different. It's never going to go back to what it was before. The world has changed, and I believe COVID is here to stay, not as this pandemic, but probably as a chronic disease like a flu. In any case, things are going to be different. And when you're talking about a recovery stock, you have to think of a recovery stock that makes sense in this post-pandemic reality. You can't go buying up airlines, hotels, and casinos. Those probably will be good, but it's not like we're just rotating back to what we had. We have to find rotation stocks that actually make sense in this new reality. And that is why I want to talk to you about Apple. I'm sure you haven't considered Apple as the ultimate recovery stock, and I get it. But let me make a case for you to explain why Apple today has a 30% upside, and it still makes a whole lot of sense in the post-pandemic universe. And this is probably the best time to buy it at a reasonable price. Stay with me.
My name is Tom Nash, and I quit my corporate job as a senior financial analyst to break down companies for you. If there's one thing you need to know about me, I don't take bullshit from anybody.
And if you chose to stay for this analysis, thank you so much from the bottom of my heart. By the way, my name is Tom, as you heard in the intro. I used to be a senior financial analyst. Now I'm a 100% full-time YouTuber talking to you about the financial markets and the stock market. And in today's video, I want to talk about something really important, which is how to slowly and methodically add recovery stocks to your portfolio in the right way. Otherwise, you're going to be stampeding and rushing into bad investments because of FOMO. Don't do it. Don't panic. Just let me explain. There's always time to do this slowly. If it's not, there'll be other opportunities. Don't rush into anything. So, first of all, how do we select the category of what is a good recovery stock for us? So, in my book, a recovery stock isn't a stock that was battered and hammered during the pandemic and now will outperform everything 100x. I don't like these stocks. They're too volatile for me. Beyond the fact, I explained to you in the opener why I don't think those stocks will outperform the market in the long term, given how we have changed as a society. I want to find stocks that did relatively well during the pandemic, but will outperform the market even better in the post-pandemic world, meaning they have some correlation to the stay-at-home trend, which will actually stay and actually be stronger during this post-pandemic universe, but also a lot of post-recovery positive signs. Now, that is why I love Apple, and that is why I think Apple should be the first recovery stock you add to your portfolio. One of a few, actually, but this video is about Apple, and let me explain my thesis why. So first of all, let me just share a piece of information with you that not a lot of people know, definitely not on these YouTube stock channels. Apple is one of the lowest shorted stocks in the market. 0.5% of people are shorting Apple. That means that institutionals are not betting against Apple. Smart money is not betting against Apple. Shorting a stock is essentially betting that the price will go down. We're not going to go into the technicalities of how it's done, but essentially nobody is shorting this stock outside of a few lunatics, and for a good reason. Look at their numbers. They have a constant 10% growth in revenue and profits every year, like clockwork. What the hell is clockwork? I'm imagining a rooster. Clockwork. Sorry about that. I don't know what happened to me. But essentially, beyond the 10% growth, which isn't amazing, you would say, well, we've seen higher growth. Yes, but we're looking for a recovery, cash flow positive, established companies. And with that in mind, a 10% annual growth is phenomenal. Trust me. The other good thing about this company is its margins. Look at the margins of Apple. It's currently generating 29% EBITDA, earnings before interest, tax, depreciation, amortization. 29% EBITDA is phenomenal, given the fact that they're literally selling physical products. This is a percentage you usually see in software as a service or software general companies. In a company that actually produces physical services to get a 29% EBITDA, it's phenomenal. And as I mentioned in my previous video about Apple, and I'm sure you watched it because you watch every single video I make, I know it. However, just in case, I'm going to put the link right here. I told you that the EBITDA amount for Apple will go up to the 30s and mid 30s in the next 5 years. Now, why? There's a good reason. It's not some magical assumption. The reason being that Apple is phasing out the actual physical stuff and moving towards services. Essentially, where I'm seeing Apple in 5 to 10 years is a company that sells ink and gives away the printers, much like the gaming consoles, much like the printers, much like every single industry that's trending towards services and staying away from goods and commodities. And guess what? When you do it, the margins go up like crazy. So this 29%, which is hella impressive in its own right, is going to go only higher in the next 5 years. That's a no-brainer. And what you need to understand here is that Apple services, as big as they are, they're still embryonic. The whole streaming of content on the Apple side is still not really happening. What about 5G? The 5G rollout hasn't really started yet, at least not at full force. 5G rollout is going to be massive for Apple as well. So there's a lot of positive catalysts driving this stock forward during this post-pandemic world, but still keeping in touch with the post-pandemic tendencies that have changed. If that was enough for you, guess what? Apple actually has an ace up their sleeve. I call it the Apple cheat code, literally. So Apple expects to double their revenues from services in the next 5 years. I think it's a very cautious and conservative estimation. I think it's going to be much bigger than that. But let's say double. For every dollar they double through services, there's a double dip. Because you have to understand that the margin on services is literally double than the margin on physical products. Meaning that every dollar we increase in revenue here increases another dollar on the EBITDA side. That is insane. This company is all win-win-win. And here's the cherry on top. If you look at the share price of Apple 3 months ago and you look at the share price today, the share lost 5%. 5% over the last 3 months where it was a massive bull market. Why? Well, because Apple, as a technological company, became a collateral damage of the whole tech sell-off of the last 2 weeks, even though it doesn't meet any of the criteria of these tech companies being sold off. It actually has revenues today, profits today, and nothing is in the future. What happened is that people were selling tech companies because of an expectation of an increase in the interest rates, basically meaning that future upside, future potential is now worth less, or at least anticipated to be worth less. Because for the most part, technological companies means that their profits are in the future, its potential. When the interest rate goes up, the DCF valuations for these type of companies go down. It's just a normal process. However, that whole thing is completely not applicable to Apple, which has revenues and profits today, quite big ones, and tomorrow and yesterday. A lot of people who don't understand why the dip happened, how the rotation works, started selling off blindly every tech company they had out of panic and sold a lot of Apple for no reason, even though it's not included. Now, what's going to happen when you have this misunderstanding? A lot of smart money is going to go in and start slowly buying Apple. Not too fast. They don't want to jump up the price. They're going to be slowly buying Apple over the course of the next few weeks because this is a bargain sale. But hey, this is just my opinion. This is not financial advice. I'm just a guy on the internet sharing his opinion. And my opinion as such might be inaccurate, might be wrong, might be the ramblings of a madman. Who knows? Do your own research. Do your own due diligence. Don't buy stock because some man or woman or unicorn on the internet told you to do so. Make the legwork. Do the research. Find out for yourselves. As always, a huge shout out to our channel members, our patrons, everybody who's been supporting the channel. We're almost at 170,000 subscribers. Thank you so much for this massive support. We'll see you guys in the next video.